Welcome, traders, and welcome to IC Markets Market Commentary. My name is Adam Harris from Trade with Precision, and today I want to do a spotlight on several charts. So I'm going to start off here with the dollar index. All right, so first of all, the dollar index is the performance of the US dollar against the basket of other currencies, which, for example, includes the pound, the euro, the dollar yen. I think there's even a Swedish krona in there. And so we can really get a sense of what it's currently, the state it's currently in. So, first of all, I just want to highlight we are in a downtrend. We have got price testing support, prices pull back into that area and is currently, and of course this candle's open, it could completely change shape, it could close as a seller's candle or buyer's candle, but it's in a really good area for this trend to continue. And if we look here, just looking at the RSI, it's flat. Okay, so it's kind of flat, MACD's flat. There's no real signs at this point in time of hinting at trend exhaustion. So the implication is that we ultimately should see this continue to the downside. Now, there's no guarantees in life, but this is the current story that the charts are telling us about. So the next thing I just quickly want to catch up on is kind of what is the news we've got coming over, economic calendar news that we have coming up over the remainder of this week. Right now, the markets are not as sensitive or as fearful with regards to inflation or recession as they were, say, a month ago. However, those issues are still on the table potentially. And so any news related to that, which is generally PPI or CPI numbers or employment numbers, that's really where the market is going to have its increased volatility. And that's where we're likely to see any kind of potential disruptions in the existing trends. So anything related to that. And so, for example, this coming Friday, the 9th, we've got PPI, US core PPI and PPI numbers coming out. So that's an example of something. And also rate news, any rate news related to a currency around the world, because right now rate changes are almost being done to offset the effects of inflation. So that isn't always the case, but currently those are the things where the market is most sensitive to it. So let's go and have a look at dollar yen here as well. Dollar yen has got a very, very nice, happy, healthy downtrend. It is coming back into an area of support, very similar to that dollar index, where this is a really good area for it to produce a bearish rejection candle. So if I could get something similar to this candle here, or a small indecision spinning top doji candle, something similar to this one over here, that would be a fantastic potential trading idea to continue to short that to the downside. You can see the MACD continues to head lower, the RSI is nice and bearish here. So all of this indicates this trend is intact and will maintain its bearishness. And actually, the general rule of thumb is, as technical traders, we wouldn't consider anything other than selling until price breaks above this high. So all of the rules in place plus the technical analysis are indicating that this should produce a shorting opportunity in the coming days. Then let's have a look at gold. So what I like about gold here, this is beautiful in the sense that we have a triple bottom. After a long trend to the downside with bullish divergence, which indicates exhaustion in the trend, we then have an actual triple bottom, plus we break this high and we break these highs. So those are very strong bullish actions that have been taken that have broken these, which means that the bears are not in control anymore. All right, so now we then have an uptrend that has formed. We've got high lows, high highs. We've got prices pull back into the moving averages here and has currently produced a little bit of a bullish candle. And even as I speak, we've got a bit of a bullish candle here. Now, again, similar to this is a prevailing common sense thing that should run through everything I say today, is that obviously we're waiting to see if any news could disrupt these trends, but the current trends should remain in place. And therefore, for me, there could be a really good opportunity if we break the high of Tuesday. If we start to break above the high of this candle here, we should start to work our way back up to these old highs, potentially beyond that, but certainly as a first target back up towards 1811. Then I wanted to talk a little bit about the US indices, which have had a relatively bearish week up until now. They've breached the previous low. But that doesn't necessarily mean that the game is over. If we look at it from a weekly perspective, we can see that we've had a very, very big run up. We've broken above these previous highs. We are above that 50 period moving average. And so what we need to see happen now, at least on this time frame, is price to come back down into kind of to connect with either this support level, but also this 50 period moving average from above before potentially heading away from that. So this does also mean that this level of support could hold. It very well could hold. Should it start to slip through, then we would find price starting to head down towards these lows. But it's, in my experience, is incredibly dangerous to short a market which is now clearly more bullish than bearish, and spends the majority of its life trending higher. The US indices spend about 70 to 90% of their lifespan just trending up. They very rarely consolidate, and then on occasion they, we have a bit of a correction. To just kind of illustrate my point, this is this whole period where it's trending up, a lot of noise during a certain presidency. Then we have a big correction here during COVID, and one here, which is effectively a correction from, from this big recovery up here. We have a normal, happy, healthy 382 or 50% for depending on which index you measure. We've got that correction. Now we've managed to sort of start to work our way back up from that. So currently we should be more bullish than bearish, and therefore I'm not going to short the markets yet until, I'd only do it once we had a lower high, lower low on the weekly, or come back below that 50 period moving average, because right now we're more bullish than that. So in other words, if we start to produce bullish candles from where we are and the support holds, my expectation is we will continue to the upside. Then, and I thought you might, and I hope you would find this of interest, I thought you might, I'm going to have a look at a couple of stocks, equities, US equities, and to kind of talk about them. So the one I really want to highlight here, which is to me worthwhile chatting about, is Apple. So I want to have a look at Apple. I'm going to zoom out a bit. I'm trying to find that sweet spot where I can illustrate what I want to talk about here. So what I want to do is keep an eye on this flat level here, because if we are going to, Apple's one of the big ones, and it's doing relatively well, all things kind of covered. And if we are going, in other words, if we're not out of the woods yet, and the markets are going to stay bearish for the foreseeable future, then I would expect Apple to break below this low. And so we have a series of lower highs coming into that. We've got a level of support here. And so what happens next is really important. For the most part, Apple should be stable. If they break above this high, then I would say we're pretty much on our way back up to the old highs. If they come back down to this low, we could be setting up for a bearish breakout pattern, which would be, I would pay attention to that. That would be an important thing to pay attention to. So next up, I've got Microsoft, which is also a very, very, very stable equity. And so, in other words, if the markets are going to recover, you would think that the strongest, historically, the strongest stocks would be able to show signs of that first. They would be the leaders. And so we've got a beautiful bullish candle here. We have breached the high, but we could see currently prices coming back down to test these levels of support. You can see it's sort of pulling back. We've got a nice bullish candle here as well. We look good. In isolation, this looks good, but we are still largely trending down. So I'm just going to quickly draw this in here, just as a loose indicator of bearish sentiment, because if we're underneath this, we're bearish. If we start to break above it, we get back up above that 50 period moving average, and we become more and more bullish. So I need you to have some sort of frame of reference for where we are now. So in principle, if we can break above this high, we are probably then heading up to here, which means we're probably going to break that, and we're going to continue to the upside. In general, we have an uptrend. This is a great area for it to produce a bullish candle, and you can see that the MACD has become very, very bullish. It's trending higher, so is the RSI. So all the signs are here. We are in an uptrend. We are bullish here. We are bullish here. The monthly uptrend has had a really good, healthy correction, because it went parabolic. It's had a nice, normal, happy, healthy retracement, and now we should start to continue to recover from there. And that's plan A. That's what should happen. So I'm going to keep an eye on Microsoft as well. Costco is another great example of a historically very, very stable stock. You can see it's very choppy at the moment, and the reason it's choppy is because it's so strong. All right, there's some selling going on, but a lot of people buying. A lot of people are saying, look, if I can get in at Costco to reduce price, that's no pun intended, because that's literally what the business does. But if I can buy this stock at a cheaper price, I want to get in. So you've got sellers getting out, buyers getting in, and so it produces this sort of choppiness. It's kind of like it's treading water. And so it's a great indicator. And yes, if the markets are, if we're about to head into some unknown trouble we've never seen before, we're going to start to see this Microsoft and a few others start to break below these lows. But if we couldn't right now, they're just trying to break out to the upside. This is forming a very messy sort of, let's call it ascending triangle. I'm not too worried about that for now. I just want to see some nice, strong support, bullish candles on these areas of support. And those are really, really good signs. And they should happen. You're starting to get that MACD trending higher. You're starting to get the RSI trending higher. These all look pretty good. Okay, then we've got the NVIDIA. So the reason I bring NVIDIA is it's a graphics company. They've been doing relatively well. Tech stocks have taken a hit. There's no doubt that tech stocks, which includes Meta, which includes Tesla, they have taken a massive hit. And actually, I should have included, I'll add Meta quickly here. And so these are the ones that are struggling a little bit with it. But you can see also the angle of the lows here is not as aggressive here. It started to slow down a bit. And so NVIDIA for me is going to be one to watch. Massive in the gaming community, not just software, but hardware as well, predominantly hardware actually. And so I'm curious to see what happens with them. Also, they've started to sort of flatten out here in terms of bearish sentiment. And so here my expectations would be that these start to climb. So for me, this is one that I really like the idea of, and it's not often spoken about. So I've added that to the list. I'm going to do Tesla and Facebook, Meta, and that's it. I'll wrap this up. So Tesla here could be doing an inverted head and shoulders, an upside down head and shoulders. So this might be the left shoulder, the head, the right shoulder. In order for that to be the case, we would have to turn around where we are now, come up and break this high. And if we do that, almost pretty much statistically, there's about an 80% chance it's going to head up to this next level here. That's going to be its next spot. It's going to come up to 225, let's call it. If that's going to be the case, in order for that to be the case, it would have to turn where it is right now and start to push its way back up. So we'll see if that's the case. On the other hand, and it has started to trend up, it is a little bit more bullish than bearish. On the other hand, should it start to come back down towards these lows, then that doesn't bode very well for Tesla. And the last one, let's finish it up. Let's go and have a look at Facebook. Okay, and so this is Meta, and you can see this is a strong trend. I mean, it's very healthy. It's pulled back. But if this was a currency, I'd be selling. I wouldn't be, if it was gold or oil or commodity, I would be selling it because it's just such a strong, healthy trend. It's got a bearish weekly candle forming at the moment. If this closes as a weekly candle or breaks as low, this is a continuation to the downside. You can see some bullish divergence creeping in here on both of these, which tells you it's kind of slowing down. You can see a big move here, then the angle sort of changing. But overall, it doesn't look like it shows any signs of stopping, especially with this current weekly candle. And that, having given back almost 70%, almost 70% of the value, it's gone back to sort of 2016 prices. It's in that area. Actually, at this point, it looks like it's heading back a little bit further than that. So these are a couple where I'm not convinced I see value with Meta. Just because it's down, further down here, it can keep going lower. I don't think, for example, for me, and this is not financial advice, everybody needs to get, from qualified people to do that. I'm not doing that. I'm just kind of, for me personally, I don't see the value in something like this. I don't think it's a deal to be getting in something like this. It looks heavily bearish. It doesn't look like it's done heading lower, and it could ultimately go down to zero. These kind of things do that. Tesla is something that I'm already a shareholder of, and I know I'm just doing my analysis, and I'll know where it gets worse or where it gets better. But if it breaks above here, it'll likely get better. NVIDIA is a company that historically has performed well, and I think that's going to do well. And Costco, Microsoft, and Apple are the behemoths. They're the big historical. They've been around forever. They're very stable in the longer term. And so they should be clues as to how the market is faring. The weaker ones starting to recover is in itself also a bit of a clue, but not really so much. So really my focus on the state of the economy is going to be looking at the indices plus Apple, Microsoft, Costco, Walmart, the kind of the staples. And then I'm curious to see where NVIDIA can go in terms of value as well as Tesla, and Metaverse will be a good indication of what the state of the markets are there. Sorry, we ran longer than usual today, but if you did enjoy this video and you found it useful, please give some feedback so that we know whether this is the kind of thing you want to hear more about. But thank you very much. I want to wish you a wonderful week. Have a great day.